Hello and welcome to our True Options Masters monthly outlook for the month of, what month is this, guys? This is September already? September 2021. I can't believe how fast this year is flying by. We started this video series last month, so this is our second monthly market outlook. We're going to be doing this the first Wednesday of every single month going forward. So Wednesday just happens to be the first day of the month this time around. So we're going to get right into it. Now, before we get started, Mike, I've got to ask you what's going on with that wacky artwork you got going back there. I know you just moved and everything, but have you changed your taste and style as well?
No, Chris, I just relocated to Arizona. It snowed in May in Colorado. That was basically the proverbial straw that broke my back, literally. So I went to Arizona. I'm in an Airbnb with some of the fanciest artwork I've ever seen. I'll be back to the bookcases in the background, hopefully by next month.
All right, good to hear. Well, I'm glad that you arrived in Arizona safely. I think that was the right decision for you. Personally, I'm having lived in Florida for several years now. Any snowbirdiness that was once in me is now gone. So hope you're getting that full house soon. Chad, how are you doing this month?
I'm doing well, Chris. Thank you.
Good.
Still in Florida, so I've not relocated anywhere. Same background setup and everything else. So same old stuff.
Yeah, I don't know if our readers know this. Chad and I live about 30 minutes to an hour apart. So hopefully one of these days the three of us will be able to get together. But with things the way they are, we'll see what happens. So I just want to give another shout out to our readers. Last month I thanked everybody for helping us get to 50,000 readers. This month we're at 60,000 readers. Guys, we got 4 months left in the year. I would love for us to get to 100,000 True Options Masters readers by the end of the year. With your help, we can do it. That's just 10,000 extra readers a month. That's what we've been hitting all year long. So if you're talking to people, if you like what you're reading, just tell people to go to trueoptionsmasters.com. It'll redirect them to the part on Vandy Hill's website where they can sign up for free to get True Options Masters. I'll just want to read a couple of emails you guys have been sending. Chad, your Monday series on unusual options activity has been really popular. So here's the email I got from Ron S. It says, love what you guys are doing. Following the giant option moves you flag as a true eye opener. I write them down and follow along to see the results, some of which are quite surprising. Here's one from Jim B. Jim B is actually from my home state of South Carolina. He says, a success story. Hey guys, thank you for the insights you've given True Options Masters. On August 9th, Chad mentioned unusual activity on ABBV. So I decided to take a small plunge on that day. So far, I am up 103.4%. Thanks for these insights. That's really cool to see. This is a free recommendation we gave them, Chad. They're not even recommendations, just telling what's happening, but this stuff is tradable too. And I don't know if all of our readers realize that. So it's exciting to see somebody making some money on this. Here's another one from Batiar. Perfect job with video and 3D, guys. So he wrote this last month after we did our first monthly outlook. It's nice to hear and see all of you talking and explaining how things work and what to expect. It gives us more confidence in you and your products. We good if you guys can make more videos like this. At least now I believe that it's really you guys who make all this content. Yes, it really is us behind the scenes. And then here's the last one. This guy says, Tom is great. Hi, Chad, Mike, Chris, and other Mike. Really love the True Options Master subscription. Your education, teaching of how to get better options trader is great. I subscribe to Chad's Quick Get Profits and Paul and Pilly's Rapid Profit Trader, another great option service we have at Vandy Hill. At some point too, I will subscribe to Mike Carr's One Trade. My year has been up and down. I'll continue to follow your recommendations from Michael C. Thanks, Michael, for that one. Hey, I'm with you. My last few months have been a little up and down too. Made a lot of money between November and May, and since then it's been a little bit trickier. But this is how it goes with options trading. Isn't that right, Mike and Chad? I mean, this is what we have to tell people: is just you're not going to make money every single month. You might even have a quarter that's sideways. You might have a quarter that's down, but this is the nature of truly just investing in the stock market in general. You're not going to make money every time, and sometimes you won't even make money every year. Some years are going to be better, some years will be worse. But what I have personally found working with both of you now for several years is when you find an approach and a strategy that works, you got to stick to it. There are going to be some months that are down. There's going to be some quarters, frankly, that are down. But that doesn't mean it's time to give up. It means it's just a tricky period in the market, and that's how these things go sometimes. So But let's go ahead and get right to it, guys. So I think we had Chad go first last month. So Mike, we're going to kick it to you. Now, Mike, last month you said your prediction for the month was to be cautiously bullish. And I think that you were right on both of those counts, to be cautious and bullish at once. So Mike, why don't you go ahead and share your screen and we'll get right to it.
I am going to start with the same idea this month. Be cautious but bullish. So the trend is your friend until it reverses, and then it's your friend on the other side of the trade. So the key there is understanding that reversal. In this chart, all I'm showing is the S&P 500 is the black line. The blue line is the 50-day moving average. As long as we're above that 50-day moving average, the trend is up. And there's no need to fight the trend unless you're trying for intraday or short-term price moves. But if you're just worried about being on the right side of the market in general, long until it falls below that blue line. That's as simple as it can get. At the bottom is a little indicator showing how far above or below the 50-day moving average we are. We're 3.41% above. That means we could see a fall of 3.4% today before it turns bulk bearish. And that number varies a little bit every day as the moving average and price fluctuate. But we're looking for about a 3% pullback before we get nervous. So, we're pretty close. That's why you have to be cautious, but we're bullish. Now, I want to go through a few charts showing why I'm bullish. When fundamentals are just off the chart, we're at extremes in fundamentals last seen in 1929 and 2000. The economy does seem to be softening. High frequency data showing that Delta and all of the negative press about Delta is pulling people out of restaurants and out of stores. So the economy could be softening. So why are we going up? Money. The Fed is pushing the market higher. This is a chart of the S&P 500, and then the blue lines show when the money supply is growing at more than 10% in the past 3 months. And as you see, the S&P, the Fed prior to Bernanke wasn't really effective at moving the market. They pushed money in as stocks fell in 2000. That changed under Bernanke. Bernanke realized that quantitative easing was needed in addition to traditional money supply growth. And it's worked ever since. The Fed, when they push money supply in the past 3 months, when they boost the money supply by 10% or more, and that's a huge growth in the money supply, we see the stock market rally. The Fed was trying to stop the inordinate growth of money supply. The stock market faltered, growth rate changed a little bit. The economy faltered. The Fed said, we're done with this. You see that little hook in the money supply there? The Fed is pushing on the gas again, and that should be bullish for the stock market. Now we're seeing that with this chart, again, shows the S&P 500. Here, the green bars show when banks are adding treasury securities to their balance sheet at a pace of more than 20% a year. This means the money is coming so fast from the Fed that there's nowhere else to put it, so banks buy treasuries. And we see that that's generally bullish for the stock market. When it stops in particular, we see an acceleration as the banks start putting all that money out of treasuries and back into the economy with loans. We should see an acceleration in the stock market. Banks are still adding treasuries, so we're not at that acceleration phase yet. So the Fed is bullish and getting more bullish. Last chart I want to look at is housing information. We saw the news come out today. Home prices rose 18.6% annually in June. And I'm using a slightly different version of that index in this chart here to get data back to 1975. The reason I need to do that is because real mortgage rates are negative. If you take out a mortgage right now, the bank is basically giving you that money for free after inflation. So now's a great time to buy a mortgage. We should see home prices accelerate. Last time we saw negative rates in the late 70s, early 80s, home prices gained 20% in 15 months. We're at the cusp of an acceleration in home prices, which will boost the wealth effect, which will boost stock prices even more. Okay, Chris, that was a lot that I threw at you. Any questions, or do we go to Chad?
No, we definitely need to stay on this for at least a second here. So, yeah, lots happening here. So easy money. Fed is stepping on the gas again. Nowhere to put that money except for treasuries. From the last 10 years, we've learned that's extremely bullish for the stock market. We're seeing home prices jump up. I mean, I can speak to that. Shoot, I mean, I bought a house 6 months ago and it's already appreciated a double-digit percentage. It's insane. What does all this mean, Mike?
It means we're probably going to see a blow off top in the stock market. So stock prices are elevated. We're probably going to see a brief bubble where stocks just reach unbelievable extremes. And that'll be the time when we change from being cautiously bullish to bearish. As everyone else is rushing in, we're going to get a little bit bearish, but we're not there yet. We should see a big acceleration in the stock market as all of this cash tries to find a home in the coming months.
You know, Mike, I was doing a little bit of research on the NASDAQ during the tech bubble in the 90s. And I think it was in the summer of 98, NASDAQ fell, I think, about 20%. And then over the next year and a half to its top in the beginning of 2000, what did the NASDAQ do? It tripled. Mike, it tripled from. So a 20% drawdown. People think the party's over. Nope. It literally went on to, just go up 200%. Absolutely insane. So when we see stuff like this, it can make people very nervous. And as you're saying, it's right to be nervous. It's right to be cautious. At the same time, you don't want to fight the trend. You're saying the trend is your friend. And historically, we've seen this stuff happen. You have maybe, once in a generation opportunity here to make a lot of money all at once. So that's why it really is going to pay to really just stay plugged into what's going on in the financial markets over the next several months, because we just don't see things like this very often. To me, it's very exciting. I'm leaning in, but there are a lot of things that's happening here. And Mike, this is why you talk about the Fed a lot in True Options Masters. And I know some people might be like, well, why is he talking about the Fed so much in an options e-letter? And the truth is because what the Fed does, it affects us greatly. You just read about the Fed again yesterday saying how, when the Fed finally does start tapering and when interest rates start going up, it'll show up in our options premiums that we're paying. We'll make more when we sell, but it's going to cost a little bit more to get into them too. So I appreciate all of this, Mike. It definitely gives some clarity to just the bigger picture of what's going on. So home prices going up, stock market going up, Fed buying more treasuries. Is that the short and skinny of it, Mike?
Like you said, Chris, this is a unique opportunity. It's the second time in 40 years that mortgage rates, real rates, have been negative. It's the third time in 20 years that we've seen the Fed push this hard on the accelerator. These are unique opportunities that really, you don't see these in the headlines. You really have to dig into the data to find this stuff. And it's just such a unique time. We need to be prepared for that melt up opportunity.
Yeah. I know I have a lot of friends who've been refinancing their home just because it's almost stupid not to right now. So
it is.
Yeah, very, very, very exciting indeed. Okay, well, I think we're going to go ahead and kick it over to Chad in just a second here. But Chad, before you share your screen, I do want to point something out. So in a second here, Chad's going to do a little bit more of a specific dive. He's going to look at the sector he highlighted for last month, and he's going to look at another sector. But before we do that, I do want to say, Chad, you're about to start something that's very, very exciting. So next Wednesday, you're doing something we've never done before. You're going to go live on camera and walk our readers through one of your favorite trades. This is a trade you've recommended probably 200 or 300 times in the last 7 or 8 years. You've got over a 90% win rate. Actually, on your core on like your core trade here, I've checked this. It's over 95% win rate. And what this trade does, it's an options trade that immediately will deposit cash into your account. And the way this works is that you are becoming the seller of an option. So if people can tell from this, the way that True Options Masters, our number of readers are opening, a lot of people want to buy options right now. A lot of people want to trade options. And that gives us more opportunity now than ever before to do the other end of the exchange, where you can become the market. You can become the seller who is actually getting paid a commission, more or less, to sell options to other people. And next Wednesday, you're going to walk people through that live on Facebook. So people can actually sign up to get in on this starting today. So if you go in somewhere on the screen or in the comment box, the description box below, you can actually sign up to get in on this. Again, Chad's going to walk you through one of these trades starting next Wednesday. You can sign up for free in the description box below. Chad, do you have anything to say on this? I think it's very exciting what you're doing.
Yeah. Thanks for pointing that out, Chris. Look, we're calling it the 3 days to instant cash challenge, to $1,000 in instant cash challenge. So that's what you want to pay attention to. It's going to hit your inbox for another chance to sign up throughout this week. So don't miss it. You want to join us. We start on Wednesday, and then Wednesday, Thursday, Friday, we just meet for like an hour a day. I'm going to explain everything to you about the benefits of selling options, so that way we're all on the same page. And a lot of people don't even think about options this way, because the exciting part of options is buying them. But then that's also where options kind of get a bad rap and everything else, where selling options, it's usually totally different than any way that you've looked at options before. I've wrote about it a couple of times, but we're really going to take a deep dive into the understanding how this works and how you can just basically pull instant cash out of the market, because that's how I like to consider it. We're just minting instant cash by selling options. So yeah, look forward to that here next week, and be sure to sign up so that way you don't miss out.
You know, you raise a really good point, Chad. What a lot of people want to do when they trade options is they want that 100% gain in 30 days or less. You know, they want to hit that home run, you know, and they want to do it over and over and over again, ideally. But there's another way to trade options that's much more consistent. And frankly, the way you do it, it's a heck of a lot safer. Again, you succeed on 95% of these trades. It's a little bit more conservative, which is why most options traders don't really focus on it, because most options traders, they want to be aggressive. They want to take on risk. They want to just go for it. You know, and it is exciting when you get those 100% in the occasional 500%, even 1,000% gains in an options trade. But the way you do it, I think when people see it, one, they're going to rethink the way that they buy stocks in the future. And they're also going to rethink the way that they trade options. Because when you do this trade, you not only get money instantly deposited into your account, you actually have the option to purchase a good stock for less than it's worth. So let's say you've got a $50 stock, you've got an opportunity to use this trade to actually, you get the right to purchase that stock for $45 or even $40. And then you can just resell it, you know, at the price it's actually on the market. So win-win, you get money, and then you have an opportunity to buy stocks, good stocks, for less than they're worth. It's really exciting. Most people have no idea how this works, Chad, but you are a wizard at this. Again, you've done this hundreds of times over the last decade. So yeah, we're calling it the 3 days to $1,000 instant cash challenge. You can sign up today for free, and it starts next Wednesday, September 8th. So thanks for that, Chad. All right, Chad, let's get to it. Let's share that screen. Chad, I believe last month you made a bit of a contrarian call. You know, even though Delta was on the rise, you said it's time to be bullish on XLE. It's time to be bullish on energy stocks. And yes. I know you want to give an update on that today. And I know you're also going to give us an update on another sector that you're seeing in your relative rotation graph. So Chad, take it away.
Yeah. So we'll dive in. I'm very sector focused because, kind of like Mike, though, the trend is our friend here when we're looking at the longer term S&P 500. And right now it's trending higher. So I'm definitely bullish on the market. So we're going to talk about more bullish trades today. But just a quick look at the XLE. So when we go back to where we were last month here at the beginning of August, you can see that we are buying XLE because it was making this rotation through the improving quadrant here on the relative rotation graph, and we are expecting it to continue into the leading quadrant. But basically what happened, you can see right after we recorded this and pulled it together and we wanted to look at energy sector, it only went up for a few more days. So it started to trend higher and then it turned lower, started the weekend and dips back into the lagging quadrant. So right now, energy sector is actually
so Chad, this was over the last month.
Yeah.
It was in improving and
month.
it just fell right back down into lagging.
Yes. So they started out, the trades that we recommended started out okay, but then they dipped, kind of got back up to break even. So all in all, it wasn't too bad of a call, but you can see that it clearly did not work out as we expected. We wanted this to trend for about the month to get back into the leading quadrant, and then that would have been enough time to realize some profits in the stocks that we were highlighting. So with energy back in the lagging quadrant, it's still another sector that you want to have on your radar for bullish trades here as it starts to turn around, but it's a little early in that move right now. So we're going to look at the consumer discretionary sector. This is the XLY, the ticker for the ETF. That's the one that I'm bullish on today. And you can see there's other sectors here moving into this quadrant, but they haven't got there yet and they haven't turned higher once they hit it. So right now, those sectors are not on our buy list or our watch list just yet. We want to wait until they start to make this rotation. And then when we look at the XLY, I'm pretty bullish on it because it's also the price chart here is trending higher. We're seeing higher lows on the chart. It's starting to consolidate now. And the red on these charts show that it was in the lagging quadrant. So this is shaded based on the relative rotation graph. So it's been in the lagging quadrant here for weeks now. And if it could just break out of this as it moves to the improving quadrant, as we start to see some of that bullish momentum pick up, these stocks are really going to take off, and they could take off here in September. So these are stocks that we want to watch, we want to have on our radar for this month. And then we'll dive into the sector though, so that way you have a few stocks to keep an eye on for this month. And this is the stocks in the consumer discretionary sector. You can see how they still follow this general rotation. And this is based on the consumer discretionary sectors at the center of this chart. So I like to continue to explain the relative rotation graph because every time I bring it up, it's probably the first time somebody sees it. So we're looking at stocks here relative to the consumer discretionary sector. And we like to find ones that are in this lagging quadrant and starting to turn higher because that's when their momentum is really starting to shift from they've been kind of beaten down a little bit and then the momentum starts to turn positive. So they move up into the improving quadrant. And then once they eventually lead the market, that's the ride that we want to benefit from because once they start to lead the market, they may not stay that strong for too long. This chart shows us that they eventually weaken and fall back to lagging the market. No matter how strong the stock is, we see that rotation kind of take place. So when we dive into this lagging sector over here and try to pull out some stocks that we want to take a look at, I'll have three that we're going to put on our radar today, but I wanted to walk you through Ford real quick. So this is one that we want to put on our radar. And you notice how these hasn't quite turned higher yet. Ford is still pointing lower on the chart. But the reason that we added to our radar now is because we're looking at the consumer discretionary sector. We already know that this sector is turning higher. So Ford, it hasn't turned higher relative to this sector yet, but it's about to. So as the sector is bullish relative to the S&P 500, these stocks are going to be even more bullish relative to the S&P 500 because they're set to outperform the consumer discretionary sector. So that's kind of the big picture view of what we're looking at and what we're trying to replicate when we take a look at these stocks. It's all about outperformance. So we find a sector that we expect to outperform the S&P 500, and then we're finding stocks that we expect to outperform the sector. So we'll take a look at Ford in more detail. I just wanted to walk through the chart because it's pretty interesting, especially when you look at how it's trading through the relative rotation graph and how we shaded these on the chart. So let's pull up the chart of Ford real quick down on the bottom. That'll come up. All right, there we go. Just took a second. But now we change this to my relative rotation graph chart so we can take a look at this in the colors that are shaded. So
this is the price chart here, Chad.
Yeah, so now we switch to the price chart. It's shaded for the relative rotation graph. And can you see that little yellow bar moving across the screen?
Yeah, kind of.
Make it too faint, it's too hard to see. But anyway, so what it would show you is relative to where Ford is moving on this chart, we can just kind of see how it rotates throughout the price chart. And I just wanted to highlight this breakout that we had back here, where it went from lagging the market back here to improving. And then as it started to break out of the lagging, improving, kind of choppy. And then as it exploded into the leading quadrant, you can see how the bars changed from blue to green. This was a big breakout for the stock. And these are the types of runs that we try to look for. And then once it peaked, you can see on the chart up here, it starts to fall down from the lagging quadrant, goes back in the weakening. And now we're in this downward price trend that we highlighted by the red and green trend lines, just highlighting that this is in a downward price channel right now. But you can see that how it relates to the relative rotation graph, because a lot of the opportunities that I look at, I don't even have to pull up the price chart because I already know the motions that typically go through on the price chart based on where they're at from the relative rotation graph. So a lot of times now I just look at the relative rotation graph and I make buy or sell calls just based on where they're at in the RRG. And it's because of stuff like this, where it tries to improve a little bit there, but then you can see it doesn't get back to the leading quadrant, falls down. Now we're in the lagging, but Ford's on my radar right now because if it breaks out of this downward price channel that it's been in here for weeks now, so it's got plenty of time trending lower, it's about to break out either to the upside or downside, but seeing where it's at in the relative rotation graph, knowing that consumer discretionary stocks are likely to outperform here over the next month, then Ford's going to be a stock that I definitely want on my radar and I'm bullish about here over the next 30 days. And then there are other two stocks that I wanted you to take a look at that we're going to keep on our radar for this month, are going to be the ones trending down here. So one's going to be CarMax because it's kind of making the same rotation in the lagging quadrant and turning higher. But the other one's going to be Active. And it's further down here because I like to look at the stocks that are away from the center because that's where the bigger movements come from. So if we're closer to the center, they're just going to perform relatively the same as the underlying index, which in this case is the consumer discretionary sector. The farther we are away from that, the bigger moves we're going to see. But GM, I don't want to touch that one yet because it's continuing lower as it's way out here. And
yeah, it's deep in the red.
And we already have Ford, that's the one that I like. That's the car company that I like right now from where it's at. It's trying to turn higher already. We see it trying to turn, whereas GM's kind of still pointing lower. But Active, this is a stock that I like. And you can see that this is trying to pull on this uptrend as well. There's a nice little price trend here where it's trending around the lows. So as long as these hold as the lows, there's key levels to look at on a price chart. But if Active can turn around higher here, this is a stock that could really take off in the month of September as well. So CarMax, Ford, and Active are the three stocks to put on your radar here for the month of September. And again, it's all based on the relative rotation graph that I like to follow. And I build a lot of strategies around this. So I like to, dive deeper into it. And when we look at, it's all about our performance because it doesn't, you don't want to, have a stock that's making money when you can have a stock that's going to make more money. So I like to look, relatively speaking, we always want the stocks that are going to move the most, generate the biggest returns. And this one, time and time again, helps me find those stocks. So I'm excited about these three companies here over the next month or so.
Yeah, I love this approach, Chad, because it really the idea here is to get as close to the fastest moving stock in the market as you can find. So you start very general and you do a sector focus, and it's all going around the center. All this is relative to whatever you're comparing it to. So in this tornado of stocks we see here, it's relative to XLY, which is the consumer discretionary sector. And then you wanna buy low and sell high relative to where the sector in general is. So we know that XLY is sort of slated to outperform the S&P 500 over the coming weeks. And we know by digging into that sector, which you've got here on this screen, we can look at the stocks that are in the red. These are the ones that have the most potential to shoot up. The ones in the green light go, yellow light slow, red light stop, and then blue light it's getting better. So you want to focus on these ones that are turning higher or look like they could be about ready to turn higher. So you've got Ford, CarMax, and Active. And I loved how you showed us how the price chart in Ford's RRG movements relate to each other. I think that was very telling because we saw it there as it was moving into the green, the price just shot up. And Ford's been in a downward channel since then, but as soon as it breaks that channel, we can see an accelerated move either to the downside or to the upside. So
yeah, that sounds about right.
I geek out about this thing every time you show it to us, Chad, because it's just such a useful tool. And I mean, I would consider you to be one of the, emerging foremost experts in this.
Thanks, Chris. But so one of the things too about it is that, so I've spent so many years like studying this just overall chart and looking into it that I forget to point out a lot of things because I realize that it's kind of counterintuitive, right? When you see stocks that are leading or lagging, a lot of people, it's contrarian because you think that leading stocks are going to continue to lead. That's kind of the whole riding the trend. And
yeah, buy high and sell higher.
Yeah, buy high, sell higher, and it can work. But the way the relative rotation graph works is that by the time they hit that leading quadrant, they're going to weaken. They may not fall back all the way to lagging. They may not even move too much on their price chart, but that momentum is going to slow down. And at that point, there's other stocks that are going to outperform it. And then you can wait for that stock that was leading to turn higher, and then you can jump back in. And the same with stocks that are lagging the market. Sometimes you think that they're just going to continue to head lower, but time and time again, this chart, and I've ran a lot of back tests and strategies on this to see where you see the biggest moves in stocks. And it's when they go from the lagging quadrant to the improving quadrant. This bridge right here, where they jump over that, just a simple price test of whenever the arrow crosses above this, that's when you see the biggest price jumps for the returns as it goes through there. It's not when it goes from improving the leading or leading the weakening or any of these other ones. The biggest gains come from it going from lagging to improving. And then the further out on the chart, as we go to the left, those are where the even bigger gains come from. So that's just some of the background into why we follow it this way. And this is the way that I like to trade it. Whereas some other people look at this chart and they'll take totally different approaches. But after years of studying and testing it, this is the best strategy that you can use for the relative rotation graph.
Gotcha. Now, Chad, I'm just curious, how did consumer discretionary do, a year and a half ago when, the COVID pandemic really hit the United States?
Oh, man. How did they do back then? I mean, everything got clobbered, right?
Everything got hammered. Yeah.
The XLYs down here.
So I guess more in the months to follow.
Yeah, so it didn't break out till, it starts to move lower here. This is later though, this is November. So early on, it just didn't give you too much on the RRG, at least as far as what to look at. Some of these other sectors you can see, like real estate, they're moving and creating some opportunities to jump into. But consumer discretionary just took a little longer before it actually got some movement here.
Gotcha. Yeah, and we know this time is probably going to be different. And I think we talked about this last month. We saw the market kind of start to freak out a little bit this past month when we saw this news of this Delta variant being on the rise. But then what did the market do? It just bounced right back. So we know that history doesn't always repeat. Sometimes it does rhyme, but I think it's certainly interesting. I love this chart, Chad. I mean, it's just, you always have kind of your finger on the pulse of what the major sectors of the market is doing. I think it's fascinating.
Yeah, thanks, Chris. Yeah, I mean, I've really, the more you spend time with something, the more it kind of blows you away as far as just how many opportunities it finds and how those work out. Like, I love looking at this. I have spreadsheets where I track it from doing basically what I'm doing now, finding the sector that's turning higher and then picking the stock. And then the sector outperforms the S&P 500, and then the stock outperforms the sector. So it may not have been the top performing stock in the sector, but it's pretty darn close. And then those are pretty close to being now the top performing sectors over those next short time periods. So for these charts, it's daily charts. So we're just looking at, a couple of weeks. So over the next few weeks, consumer discretionary sector is the one to have on your radar.
Yeah. So I want to tell our readers, if you guys ever have a sector or even a stock or even a couple stocks that you'd like Chad to look at with his RRG, his relative rotation graph method, you can write in at trueoptions@bannonhill.com. Chad covers a lot of these in his Thursday articles, which is his Bank It or Tank It series. Sometimes he publishes it as quick takes, where he'll do a quick price chart analysis. He'll look at where it is in the RRG. And so Chad does that on his Thursdays. You can write in trueoptions@bannonhill.com. And I know, Chad, that we do have readers write in, and you'll look at what readers are wanting to see when you decide what to cover on those Thursdays. So guys, how do we tie all this in together? Mike is saying, we might be seeing, not another shutdown, but maybe another scare, but the market's probably not going to react the same. In fact, we have several, forces that are probably going to be driving the market higher here. Chad's looking at a couple of sectors. He was bullish on energy last month. Still think it's going to continue to outperform that, in addition to consumer discretionary. So guys, how do we tie all this in?
I'll let you jump on that, Mike.
I think it complements each other. We're looking at a large amount of money coming into the consumer hands through bank loans. And Ford is going to benefit from that. CarMax is going to benefit from that because this is where people finance their cars now. They'll take 6-7 year loans. Banks want to lend them the money. They have the money. As soon as Ford makes the cars, they're as good as sold. I don't have any idea what Aptiv does, so I'm not sure how that fits into anything.
Yeah, isn't Aptiv a technology stock, Chad?
Yeah, I believe so. I mean, I'm kind of the same way, though. I don't have to know what a company does. If I can just look at the price chart and see it on the relative rotation graph, I don't have to know anything about them. I just buy them and trade them based on, the price movement. But you bring up a good point, though, because, I get so tied into just the strategies. When you step back and look at what's going on with car companies right now, they don't even have inventory. So there's a lot of people that are out there, they're buying used cars. So that's going to be good for CarMax. But yeah, as soon as Ford gets the new lines out, new cars rolling out, people are going to be buying them like crazy because they just spent too much money than they should have on used cars, or they've been holding off on making purchases. And this all has to do with that chip shortage and everything else. So it's a good time to really look at those companies and have them on your radar. And part of the weakness is already being priced in. We saw it in Ford. It's been sliding here for weeks now. So some of the weakness in the market's already being priced into the stock. So yeah, it's a good, once you can step back and see the fundamental picture sometimes too, it'll align with a lot of times what the charts are showing us.
Chad, I'm right there with you. There are a lot of stocks that I trade in my brokerage account. I have no idea what they are, and I don't care. And you say this a lot of times with your quick take series. The price chart will tell you more than anything. So I can look at the price chart, I look at what sector it's in, I can look at its market cap, just focus on a few things. And sometimes I make a trade like within just like a minute of research sometimes, and I end up doing pretty well. When you get good at this and like focusing on the few things that really matters, that's sometimes all you need to do. So many people spend hours and hours and hours of research to get a tiny bit of alpha, and you see how well it works for some of them. And Mike, I appreciate you kind of bringing everything in together. And I was kind of starting to form that thought, but you completed it. So easy money, more money supply should be good for consumer discretionary because there's just going to be more money running around. It's easier to get it, easier to get loans. Consumers are going to be able to spend more. And we also know in periods of mania like this, I mean, you referenced 1929, you referenced 2000, when the wealth effect of houses going up and stocks going up. I mean, people are just going to be throwing money around like that. So that, obviously could be good. CarMax too, if inventory for, manufacturers like Ford is low, or where are they going to buy their cars? It's going to be through CarMax. So Mike, I know we can always rely on Mike to tie everything together. Mike's our big picture macro guy, Wonder Boy genius over here.
He does.
So Aptiv is a auto parts maker with a focus on safety and green solutions. So that's just, that's ideal for right now.
All in the auto industry. But Mike, I gotta ask you though, I saw your charts and everything else that you were showing us, calling for a blow off top. It's exciting stuff, and it made me, even more bullish than kind of before when I saw everything that you were laying out. But then you're still just cautiously bullish, right? You weren't
right.
Like, what would it take for you to be extremely bullish? Is it just because you see a top around the corner? But
no, I've always focused. You have to be cautious because there is a black swan out there. We don't know what it is, and we don't know if it's coming. But there's a black swan flying around somewhere, and that's why we need to be cautious. We can't get complacent. Because, the Delta variant might not be the big one, but maybe the Lima variant will be. Or there's another variant out there. And in addition to that, I'm going to get political for a second, but let's remember what Obama said about Biden. He can really foul things up more than anyone can expect. If the economy does implode, I said foul, so you don't have to bleep it. But if the economy implodes, he showed us in Afghanistan, he's not going to listen to the experts. He's going to make a decision and stick with it and drive us off the cliff. And going back to Obama, when he took over the White House, he said, we got the car in the ditch and all the
You broke up.
who told us how to get it here are drinking slushies now, telling us how to push it out. So we got to be careful. The black swan is out there, and the administration may not be up to the task.
Yeah.
You know, Mike, a lot of our readers, they don't know, like, I know a lot of them are Wavery background, but you've got, I mean, frankly, some pretty serious intelligence background. So you wrote a great piece in your Options Masters, you know, per my request the other week, because I wanted to get your take on it. Because, you know, you got all these people on social media who were suddenly geopolitical experts. And, you know, I realized, like, you were actually kind of a Cold War hero, Mike. And you did say that based on your observation, it's pretty clear the way that we exited Afghanistan so quickly and the way it happened, it kind of seems like there may not have been proper communication between White House and the Pentagon. So I appreciated your analysis on that. And that's why I wanted to have you write about that, because I knew you'd have some kind of insight. To me, I'm looking at this and I'm thinking, you know, this is the first sort of like geopolitical scare that the US has had that could affect the stock market in years, you know, maybe, you know, pre-Trump. You know, and so I think about stuff like that, you know, black swans can happen. And, you know, what I was saying about the NASDAQ earlier, it went down 20% and then tripled. That kind of volatility, like if you're not careful, it can definitely screw you up very fast if you're just going, you know, excuse my language, balls to the wall, just throwing everything in, trying to make, you know, a quick buck, trying to double your whole account overnight. You do have to be cautious, but at the same time, you have to lean in as well. And that's why you have to, I mean, really be very strategic. You have to really focus. I mean, these next few months, I mean, I see it too, Mike. You got to really, really lean in. We got to spend a little bit more time paying attention to the markets than we normally would, because this could be an opportunity if we play it right, to really make quite a bit of money. So I don't mind you getting political on us on the occasion, Mike. It's a rare moment where I see you up in arms, you know, having an actual opinion for once.
It's a scary time. And, you know, we do need good leadership, and hopefully they're going to have an after action review and figure out how to avoid a fiasco next time.
Yeah. If you guys didn't see that piece that Mike wrote on Afghanistan, you know, last week, definitely go look that up. You can just browse on Banyan Hill's website on articles Mike Carr's written. You'll see it at the tip top there. So Chad, I think you were going to chime in with something else.
I was going to say, I think it's good to point this stuff out because, you know, like I said, you show the charts, you say, and then you still say you're cautiously bullish, but it's like the charts are almost screamingly bullish. Like there's no concern there. The Fed's foot on the gas. There's housing markets just in the curve, and it's got plenty more room to run. So there's a lot of bullish activity going on. But yeah, I mean, I agree with you too, though, with the cautiously optimistic. I think we're in a sensitive time now just because, and you can almost, when you look at the big picture, it almost looks like this all the time, but it looks like right now we're pulling a lot of the government safety nets pulling back a little bit. The unemployment benefits got rolled back. Now people can be evicted from their homes. So we're really going to see here over the next couple of months how strong the economy has been during this rebound, and if the government safety nets work the way they should, to where they kind of have this easing back into reality. So I guess the question will be is like, are we back to normal yet, or are we going to see a lot of weakness now that they kind of pulled away some of the safety that they provided to help people kind of deal with this transition from the pandemic? But, you know, I guess that'll all start to play out here over the couple of months. But to your point, there's always a black swan out there. I guess after the black swan event, that's when you would probably be extremely bullish. Once the market just crashes,
but there are environments to that point that are more conducive to a black swan swooping in and taking your money than others. And I think, you know, Mike started this out when he was looking at his charts, is that we're kind of seeing a bit of a softening in the economy. And Chad, all the stuff that you're saying right now are things that can make the stock market freak out overnight. At the same time, there are things in place that are going to be good for stocks in the short to medium term. So you're going to kind of see this disconnect from what's happening in the real economy and the stock market. And it's those kind of things where, you know, you can see a lot of extreme volatility overnight. You know, you're going to see stocks and asset prices rising higher and higher and higher. Well, then people who have made the gains, they're going to take some profits. They're going to get spooked, and they're really like, oh, if I don't take this money off the table now, I'm going to lose it. That's going to drive selling in the short term. And it's just going to see these just, you know, extreme up and down moves, which we know as options traders, you can trade both directions. So yeah, very, very exciting.
That's what I hear.
For better and for worse.
Yeah, I hear a lot of profit opportunities, either upside or downside. Just once the market starts to really move, there's a lot of ways that as traders, we can make a lot of money. So that's exciting. Either way, I mean, I hope the best for the economy, of course, and no black swans.
Of course.
You know, whatever comes around, as traders, we're here to take advantage of it.
Yeah.
That all sounds good.
All right. Well, I think that sounds like a pretty good time to wrap up. Appreciate y'all's time as always. We hope all of our viewers enjoyed this video. Again, we'll be back to this first Wednesday of next month. Don't forget to sign up for Chad's 3 days to $1,000 instant cash challenge. You can do that in the description box below. We'll also be sending a couple emails out over the next week just to remind you to do that. Again, Chad's going to walk you through a live trade, an options trade that is completely different from most options trades you've experienced. So very, very excited to see that. Again, appreciate y'all's time today. Thanks to all of our viewers for watching, and we'll be back to it later. All right, Mike and Chad, good talking to y'all.
Thank you.
Thanks.